Hi, I'm John Fitzgerald, and I want to welcome all of you lovely custodian clients from Newcastle to our official relaunch of Newcastle, which we're really excited about. You know, when we talk about custodian, it really is a family we like to breed. And when we have people work for us at Custodian, it's so important we get the right person. And that's why when Mark left us at Custodian, we didn't rush into replacing him. We waited until the right person came along. And that right guy is Doug. And we're really happy to have Doug on board. Doug's a property person. Doug's a country boy. Doug's a man who has responsibility, family, and a really great communicator. And you're going to love spending time with him, meeting him. And he really does care about what he's doing and about the people he's working with. And that's so important. I think that really does embody the whole custodian philosophy. How are we going? Well, I was saying at one of our recent functions that we've gone through the worst financial crisis in our history. And in fact, in many people's lifetimes since the last depression. What have I been doing differently to what I'm doing 2-3 years ago? And what am I doing differently? And how has it affected me? The answer is, it hasn't affected me at all. And secondly, I'm doing exactly the same now as I was doing last year, as I was doing the year before, the year before, and the year before. Buying residential property for growth and income growth. Sometimes you get a lot of growth and less income growth. Sometimes you get a lot of income growth and less growth. Overall, it averages itself out to maybe 13 to 15% per annum combined. Sometimes more, and particularly at the moment because we're getting such high rental growth. And that's a really good litmus test, I think, because we've seen every asset class completely tested in the last few years. We've seen shares go down by or lose nearly 10 years of their ground. Just amazing. The All Ordinaries today is trading at what it was trading at nearly 10 years ago. Now, 10 years ago, I was buying houses and custodians were buying houses, perhaps some of you, for around $160,000 to $200,000. Every single one of those houses now is worth around $400,000 to $450,000, more than doubled in value. And yet, the share portfolio, a lot of it is still trading at what it was trading 10 years ago, or small growth. Now, I'm not trying to compare shares with property because I don't profess to be a share person, but I do look at it and scratch my head and say, well, why wouldn't more people go into property? It has stood the test of time, and 100 years of growth, doubling in value every 7 to 10 years. But there's probably some more fundamental reasons we're in property right now, and why I'm so excited about property right now. We've got the lowest interest rates we've had in 50 years. What it basically means is we're able to buy a property for as little as $40, $50, $20, $30 a week. It was $40, $50. It's around $20, $30 a week. That makes a big difference, and it's a fundamental. It's a fundamental because we've got such a shortage of properties. This time next year, ANZ Bank forecasts we will be short around 250,000 homes. Now, with that shortage, rents are going to continue to rise. So that $20, $30 a week is going to become zero, is going to become cash flow positive. And that's the real beauty of property. It's always improving for you. The lowest interest rates, rents rising, we've got record population growth. Record population growth. Australia's population is going to grow by nearly 7 million people between now and 2026. 7 million people. Where are they going to be living? The majority of them in the main capital cities. Brisbane, number 1. Melbourne, Sydney, Perth. Those 4 capital cities. In fact, those 4 capital cities will take nearly 5 million of that $7 million in population growth. And the nearest growth centre is going to be Adelaide, and that'll have about 1/5, 20% of the growth of the other capital cities. So the other capital cities are going to grow by over 1 million people, whilst Adelaide grows by about 200,000. It really is compelling. And that's all we really need to think about. Because as you're sitting there tonight, you've got to be thinking, okay, I've got to start planning and thinking for my future or doing something about my future. What can I rely on? Housing. Record population growth. We've got a shortage of housing. We've got rents rising, and we've got the lowest interest rates in 50 years. To me, they're fundamentals, and it's really not the only reason I'm in this business, but it continually reminds me, particularly when we've had this horrendous financial crisis, that you've seen shares decimated, you've seen commercial property decimated, industrial property, farming property, all different types of property. Even the high end of residential has really been hammered. What stood the test of time? Custodian property. And what is custodian property? We're at the low end of the market. All the custodian properties are under 400,000, certainly under 500,000, and most of them under 400,000. And you would have read it in the newspapers. That end of the market has stood the test of time. It's holding up. And that's no chance that that's happened. It's always been the case. I learnt that back in the 91 recession. That low end really does hold up. So welcome along tonight, and it's a good opportunity to ask questions, work with Quinny, work with Doug, ask questions, get involved. This is a very exciting time. It's a very exciting time because it's an opportunity for you to really set yourself up for what's coming in the future. Now let's talk about that for a minute. The government, Treasury, and just about every other forecaster is forecasting a boom sometime in 2012, 13, 14. It's going to be a residential property boom. We're going to be led out of this recovery by residential property. Now, it's in the news, and I've told you about it, and I'm telling you about it again. Set your portfolio up now, because what's going to happen in that boom is property is going to grow in value, rents are going to continue to grow in value, and the properties you're buying today for $350,000 to $400,000 are going to be all $500,000 to $600,000. Think about that. As usual, I always love to hear from you. If you've got anything that you'd like to speak to me about or ask me about, send me an email, johnf@jlf.com.au, or ask Doug or Quinny when you're speaking to them, what would John think about this? I always love to hear about your journey, because your journey is my journey. We're on the same path. Thank you for listening to me. Thank you.